How am I doing? I'm alive. I can't tell. I can't tell. This isn't letting me be great. Anyway, listen, guys. Give me 1 second. I'm trying to like do all the things and be uh, live on Facebook. And here you guys. Yes. Good afternoon. Good afternoon. Good afternoon, everybody. I'm so excited to have you here. So here's the deal. First and foremost, my name is Patrice Malloy. If you have not met me yet, I am the owner of Malloy Management Group. We are a financial services and advisory firm that helps women, especially in the service-based industries, as well as e-commerce, master their finances so that they can be empowered to take care of their business. And in addition to that, we help them with their taxes. Okay. So one of my main missions and goals and things that like gives me all like the feels in the world is to help my clients save money. And so I just wanted to come to y'all really quickly and just chat with you guys. So breaking news, I don't know if you guys have seen it, but the IRS is apparently going to extend the filing date to the 15th of May, which is fantastic. One, because it gives me enough time to do a great job and work on learning more stuff, look at this new bill that they passed, make sure that I'm applying as much as I can as far as deductions and other special like cases to my clients. And it also gives you guys a little bit of extra time to get prepared because I know a lot of people have been like struggling and stressing because, you know, the filing date is coming up, but you don't have to worry as much. And I know that for some people, for tax, especially if you guys were impacted by the storm, they have extended it to June. So that's just something to know. But I wanted to come to y'all, like I said, and then just add a couple of quick things to you guys. So as I'm doing these files, or these returns, excuse me, I'm seeing like a lot of interesting things, right? And one of the things that I want to kind of talk to you guys is like the top like mistakes that people make. And these are reasons why you get an audit. These are reasons why you may potentially like submit your information and you get it sent back to you because it might be something really quick and simple, or it might be something like a little more egregious, like you know, kind of told a fib on your returns, which is definitely something that you do not want to do. You want to make sure that you are reporting everything accurately. You want to make sure that you are keeping all of your receipts. You want to make sure that you are telling a proper story with your business. If you have business expenses and transactions, you want to be able to make sure that the things that you are buying and the things that you are basically claiming are within the scope of your business and what you do day to day. So basically, don't be saying that you need to buy like, you know, Louis Vuitton and luggage and all this stuff to take like a business trip, okay? Because it probably will not be deductible. Just saying. Anyway, like I said, there are a couple of things I want to talk to you guys. There's actually about 7. So these are the 7 most common mistakes that people make in their tax returns, okay? So the first one is the wrong filing status. A lot of times people are not sure where they fit as far as their filing status. And so there are 4 major ones. So you're single, you are, or excuse me, 5 actually, sorry. Single, married filing jointly, you know, married couple, married filing separately, head of household, and then qualifying widower. And so you need to make sure that you have carefully and thoughtfully determined where it is that you fit within those filing statuses. So if you're single, obviously you're single. If you are head of household, you have children, you have dependents, and you take care of more than 50% of all the day-to-day expenses throughout the year. If you're married filing jointly, obviously you're cohabitating, you are a union, you are working together as one basically entity, essentially. If you're married filing separately, you're still technically married, but you decide that you want to file separately for a various number of reasons, right? Maybe one of the people have a much higher tax bracket than the other. Maybe you're deciding that you potentially want to split ways, and that's a great way to kind of start separating your finances, assets, liabilities, so on and so forth. It could be a number of reasons. And then the last one, the qualifying widower, is obviously someone who has experienced a death and they can still file their taxes for an additional 2 to 3 years after their spouse has passed away. So that's just something really quick to let you guys know. So the second one that I'm going to talk about is the wrong social security number. Now, this is really easy to mess up, quite honestly, because if you're typing in these numbers on your software or whatever else you're using. If you're potentially using a form, it's easy to kind of transpose numbers. It's easy to make mistakes. So you want to make sure that you're definitely paying attention to your social security number, because one, you want to make sure that you get the refund that you're supposed to get, or if you do owe, you want to make sure that the IRS can reach you so that you're not accruing penalties and interest. And two, you want to make sure that you get the money, right? Like, you don't want to put some random person's social security number into the tax software and not have your money sent to you. So that's number two. So again, it's the wrong filing status. Number two is the wrong social security number. Number three is a big one. It's your credits and deductions. If you are not comfortable with, if you're not knowledgeable in, if you're not experienced in entering your deductions into tax software or into your form, I would recommend highly that you get with a tax professional, because there are a lot of codes that we use. There are a lot of different types of deductions that are applied. There's a lot of research that goes into helping you and our clients understand what it is that you are actually eligible for. So you want to make sure that you're connected with somebody who can really help you with that. If you do feel comfortable with it, you want to make sure that when you are claiming those things, that you have definitely gone and pulled your profit and loss statement from your accounting software. You have accurately recorded all of your expenses and your income, sales, inventory, all of that kind of fun stuff, so that when it's time to actually create your tax return, you can simply take a look at it and you can start to enter the information. So like I said, a profit and loss statement is basically telling you all the money that came in, all the money that came out, and the remaining balance based on those two. Okay, so that's very important. Number four is your taxable accounts, so like your IRAs, your 401ks, any kind of other investment or retirement vehicles. So if you have received any kind of distribution this year, you want to make sure that you're accurately tracking that, you're recording that, because IRS wants their money. They're going to make sure that you pay the taxes on it, and you don't want to get caught up for something so silly as that, right? It's usually about 10 to 40% depending on how much you take and what type of investment vehicle you use, but you want to make sure that you take care of it on the front end rather than the back end, because if they get you, you're going to have to pay some additional money. You may get an audit. You may have to end up having somebody who could do some tax resolution for you, and that gets increasingly more expensive and more complex. So don't lie. Okay. Number five, so math errors. So if you are putting your information in, like I said, your W-2 information, your 1099 information, and you put something in incorrectly, you key it in wrong, that's going to cause an issue. So if you put more in than you actually made, you're going to be, in a potentially higher tax bracket. If you put in less, you might be in a tax bracket that's lower than you're supposed to be in. Either way, you get in trouble. You don't want that to happen. So pay attention to those things. Look at those things very closely. Make sure that that's something that you are very diligent about and focused about. Okay. Number six is going to be the wrong bank account information. Now, I don't know how many times this has happened, or if you know of anybody that this has happened to, but if you put the wrong banking account information or the wrong routing number, somebody else may potentially get your money. And quite honestly, the IRS doesn't take responsibility for that because you put it in wrong, right? So it is your responsibility. You need to take the onus in making sure that you are putting your information in correctly so that the money comes to you, or that the money is deducted from the proper account if you decide that you want to do an electronic payment if you owe. Okay. And number seven, which is our last one, is not signing your tax return. So sometimes people, I don't know if they get excited, they just kind of forget, but you have to make sure that you sign your tax return. And especially if you're working within a professional, because when you do sign your tax return, that essentially gives us the permission to transmit your information to the IRS. So if you don't have it signed, you can't get your money. And you want to make sure that you have that. You want to make sure that you're also able to keep your records. So again, those are the top 7 things that I see. Those are the top most prominent mistakes that I could say that I've experienced and that are kind of recurring. So I just want to recap really quickly. So just make sure that you have the appropriate filing tax status. You want to make sure that you have the right social security number. You want to make sure that all of your deductions and credits are put in and created properly, and that they actually apply to you and your situation. You want to make sure that the taxable amounts for your IRAs, your 401ks, all of your other investment vehicles are correct and accurate. If you have received distributions, you want to make sure that you're recording that so that the IRS can take the tax that's applicable for that particular sum of money. If you again, are keying things in manually. Even in your software, it's easy to make a mistake. You want to make sure that you don't have any math errors. You don't want to transpose any numbers. You don't want to put in any incorrect values because that will impact your return. And also, guys, if you have these issues and you try to submit it, they'll probably send it back to you, which delays the potential for you to get your money. So just, again, you want to be very careful about that and diligent about that. Again, number 6 is the wrong bank account information, which I think is kind of one of the most important things because you don't want somebody else to get the money. And then finally is signing your return. You want to make sure that you sign your return. So again, those are the things that I just kind of wanted to briefly talk to you guys about. I wanted to let you know that the filing date has supposedly been extended for an extra 30 days. Get excited. I'm super excited about that. And here's the deal, guys. I just want to share something with you. If you feel like you are confident in doing your own thing, if you want to do your own taxes, if you're feeling like you don't want to try it, I'm excited. Let me, let's do this, whatever. I want to invite you to attend my 5-day challenge. And so one thing I will say, so it's originally scheduled for the 22nd, but I think I'm going to push it back, quite honestly, to the 29th because this gives me some more time to look at the new laws and the bills that came out. It gives me some more time to beef up the information that I'm going to be providing to you. Because, like I said, I want to make sure that you guys are armed and empowered to take care of your finances, even if you don't decide to go with me, regardless of the fact, regardless of how you get it done. I want you to get it done. I want you to be confident. I want you to feel strong and excited. Like, I want you to get excited about your finances and understanding how your business works. Because if you don't take interest in it, how can anybody else? So, again, I just wanted to chat with y'all. I will put the link in my bio for Instagram, for Facebook. I'll put the information on my page. I'm super excited. I'm looking forward to connecting with each and every one of you. And talk soon. Have a good one. What are you doing? Did you finish it?